Walmart recently announced and reported their quarterly earnings results, and what investors saw from the company led for the stock price to fall by more than 6%. Now, I evaluated the company's earnings results. I read the entire transcripts of the earnings conference call the management team held with Wall Street analysts, and I didn't see anything in there that warranted the stock price to fall by over 6%. I thought it was a phenomenal quarter from Walmart. Sure, you can say that the forecast for the upcoming year wasn't great, but it was better than what they forecasted for the previous 2 years. So I didn't find any fault with that either. The only reasoning I can tell for why the price fell by so much following the earnings results was because on a forward price to earnings basis, Walmart stock had already become so expensive, and maybe it was a bit of a pullback because the expectations had become so optimistic already. So I wanted to share with you the recent developments at Walmart and what's going on with this incredible company.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right. So in their latest quarter, Walmart reported sales growth of 5.2% and operating income was up 9.4%. Walmart's CEO Doug McMillon saying that they continue to gain market share across countries and income levels. As with the first 3 quarters of the year, transaction counts and unit volumes were up across markets. Man, that's a lot of good news packed into 2 or 3 sentences there from the Walmart CEO. So let's unpack some of that. First of all, sales growth of 5.2% for Walmart is really strong. It's been strong like this for the last couple of years now. And that's a big difference between the Walmart of the 2010s, when it was consistently losing market share to everyone, almost everyone, especially Amazon. But in the last couple of years, Walmart is seemingly competing effectively against Amazon in the areas that Amazon is extremely strong in, like delivery, like e-commerce. And that's really facilitated this growth for Walmart. E-commerce sales as a percentage of overall sales is approaching 20% for Walmart. And more impressively, e-commerce sales are generating healthy profit margins that are improving as Walmart learns how to serve customers the way they want to be served. In the latest quarter, they gained market share across countries and income levels. And that's another key there, across income levels. Walmart's management team said that the biggest growth driver for the company in the recent quarter was higher income people shopping more at Walmart. These are people, households that earn over $100,000 per year. So that's also impressive because Walmart had a reputation of selling low quality items that wealthier households tried to avoid. They didn't want to shop at Walmart because the items they were buying there would not last very long. They were cheaply made, lower quality, and so they were avoiding Walmart. But the assortment has improved, especially as Walmart has expanded the grocery category, which is also one of the stronger drivers of growth. And that's really attracting wealthier households that are also feeling pinched by inflation. Just because you make $100,000 or above nowadays doesn't mean you're living this very wealthy lifestyle in the US. The cost of living has increased by so much in the last 5 years, thanks to inflation, that you've got to find value. You've got to make sure you get the most bang for your buck. And even wealthier households are being more mindful of that because of the rising cost of living. So Walmart is attracting all sides of the spectrum here in terms of consumers looking to Walmart for value. They went on to say that they're strengthening their ability to serve people how they want to be served in the moment. That's what's driving our growth. Our prices are low and we're becoming more convenient. It's the second part of that sentence that's really driving the growth. Walmart has always had low prices. They've been excellent at that. But the second part, becoming more convenient, is finally resonating with consumers because up until the last, I would say, 3 years of the 2010s, Walmart had or the last 5 years of the 2010s, Walmart had resisted the shift in consumer preference. People started preferring shopping online in broad scale starting in, late 2007, 2008, and then it really accelerated starting 2010 through 2015. But Walmart hadn't really built out its online business to make it extremely convenient. Now they've added some of those features like buying online and picking up in a Walmart parking lot. That's incredibly convenient. People have shown they love that feature. They've shown that even with Target that offers a similar service. People also show they're willing to pay for, 1 hour delivery or delivery within 3 hours of making a purchase online. So these are all things that people want, and now finally Walmart is offering that. And Walmart's figured out a way to offer that profitably. Because previously Walmart wanted you to come into the store because you make more impulse purchases when you come into the store. But now they've found a way to profitably serve customers the way they want to be served, which is shopping online and then having convenient fulfillment options. And that's really driving growth for Walmart. And that's what's driving the valuation. Walmart is trading at a forward price to earnings of 32.7. That's similar to what Amazon is trading for in terms of valuation. So you have Walmart, which historically traded in the forward price to earnings in the teens, is now trading at twice its usual valuation because it's transformed its business so dramatically that investors are very excited about Walmart's prospect. When I did a discounted cash flow valuation on Walmart, I found its intrinsic value to be worth $127, where the current market price is $97. So you can see investors on Wall Street are realizing what Walmart is achieving and are attracted to these results. They went on to say that they're growing profits faster than sales and they have runway to scale their higher margin businesses like membership, marketplace, and advertising. We're able to improve ROI even as we invest higher levels of capital to take advantage of the opportunities to strengthen the company. As an investor, there isn't something very much better than what you're seeing here, other than if Walmart started talking about, we have so much customer demand and we can't meet with the supply, right? That's the other magical statement they could have made. But they make two pretty strong statements here. They're growing profits faster than sales, and they're saying that we can see that we have a lot more opportunity to continue expanding our higher profit margin businesses. So not only are they saying that profits are growing, but they're also saying that they think they can accelerate the growth of those profits in the future. And then they're saying also that the return on investment in their big capital expenditures, like improving stores, like logistics and fulfillment, it's improving their return on investment, even though they're investing more. So that's another positive benefit there from Walmart. And, you know, this is the first part of the earnings call transcript. And I can tell you that it's a lot more of these kinds of things that Walmart's management team talked about throughout the quarter. And so you can understand why the stock now trades at such a premium valuation. I actually wish it didn't trade at such a premium valuation. I would be interested in jumping in here, but at the forward price to earnings over 30, I think it's a little bit rich right now for Walmart. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.